We've reached the dog days of summer, but luckily for us dividend investors, dividends, they never rest. They put money in our pockets every single month. Money that we can use to pay for all of our living expenses. And it doesn't matter where you were born, how much money you have, anyone can enjoy this passive income stream that is dividends by just holding on to dividend stocks. Today I'll share exactly what companies paid me and how much as part of my monthly video series sharing my journey toward financial independence. So whether we're running down that road or running up that hill, dividends have the potential to make us all rich. Let's take a look at the companies that have given pay raises in the past year. Will you look at that? There's nothing there. None of the companies that I owned raised their dividend in July, but there are some other popular dividend companies that did give raises. This includes Clorox, which raised their dividend by 1.7%. This was the 45th straight year that they have increased their dividend. We also have Walgreens raising their dividend by 0.5 percentage point. Man, these raises haven't been too hot. Walgreens has now paid a dividend for over 89 straight years. Wells Fargo increased their dividend by 20%, though the dividend is still not as high as it was before their massive dividend cut in the summer of 2020. We also had Ford raise their dividend 50%. It's now as high as it was before C19. So we ended on a high note. Let's continue that trend by looking at all the dividend payments I got in the past month. You know, the real reason you clicked on this video. Starting off here, we have Vici Properties, and they paid me $14.57. So Vici has 43 different properties across the United States, half of those being in the Las Vegas metro area. In June, Vici was actually added to the S&P 500, meaning the company IPO'd and got added to the index in just 5 years. That's actually the quickest a REIT has ever been able to accomplish this. So after Vici, we have Chubb Insurance, and they paid me $2.49. After Chubb, we have Medical Properties Trust, and they paid me $29.14. MPW, I might actually make a totally separate video about this, but MPW's share price has fell so much that the starting dividend yield is now almost 8%. And this is such a steal for a high quality company like Medical Properties Trust. The reason for the decline is that there's some concerns about one of their largest tenants being insolvent, meaning they can't pay their bills. Based on their latest earnings call, it seems like that tenant, which is named Steward, is actually doing okay. And another reason for their decline in share price is that interest rates have been rising. So that means it's harder for Medical Properties Trust to expand their 447 healthcare property portfolio because the cost of borrowing money, that has now gone up. At the end of the day, MPW is an amazing stock. It's trading at a steep discount, and you're able to lock in an 8% dividend yield. After MPW, we have Medtronic paying me $9.61. This is a healthcare equipment company, so you know that's always going to be around. The stock has also been on a pretty nice discount here recently, so MDT $9.61. Alright, so after Medtronic, we have Realty Income, not Reality, and they paid me $7.40, which got reinvested into buying more shares of Realty Income, not Reality. What's really cool about is that they pay dividends every single month, just like owning a real physical rental property. has over 11,400 commercial properties under long-term lease agreements. They have a 99% occupancy rate. They have properties all over the US, and they pay me money every single month. So after Realty Income, we have Store Capital, another real estate investment trust, and they paid me $18.48. So Store Capital is now up to 3,000 different investment property locations. It's very diversified with 579 customers. It has a 99% occupancy rate. And you know what the best part is? It's that I get paid dividends every quarter without ever having to raise a single finger, as I don't have to go through any property management related headaches that you would have to do with traditional real estate. So I spend my money on these assets up front, such as buying shares of stores, such as buying shares of O, and they pay me back every single month in one way or another. It's a really easy way to grow my wealth. Make sure you guys are subscribed and make sure you've tapped that like button. Who else is giving you this much transparency every single month? So after store, we have Nusi, $12.70. This is the 5th straight month that Nusi has a lower dividend than the month before. I've made a video on why Nusi is just performing so bad compared to the other income ETFs, and I'm seriously considering selling my position and moving that money elsewhere. After the disappointment that is Nusi, we have QYLD at $18.99 for this month. A lot of people have been unhappy with QYLD's performance, but I recently just put out a video explaining why I actually think QYLD is doing just fine. I'm still happy with the results, and it's exactly what I was expecting. So no disappointment there. After QYLD, we have the triple Qs, an ETF that's built for growth that holds 100 of the largest companies on the NASDAQ. They paid me $10.03. After the triple Qs, we have RITM, Rhythm Capital Corp. So if this doesn't look familiar, this is actually what used to be known as NRZ. It's still the same business model. They still invest in mortgage-backed securities. Very risky asset, but in return for that, you do get a pretty large dividend yield. Very small percentage of my portfolios toward this. So $3.21 from Rhythm. All right, after this company, we have SPY, the Spider S&P 500 ETF. As generic, as boring as it gets, but it's a great way to build wealth over time. You cannot dispute that. And they paid me $10.38. All right, after SPY, we have JP Morgan Chase. Even though it says they paid me on August 1st, this is really part of that July tranche, and they paid me $20.47. I also had XYLD pay me $1.75 in my Roth. So altogether, I had 14 different companies / ETFs pay me for a grand total of $175.37. This is a 67% increase from last July when I only made $104.91. I'm now up to $1,203.65 in dividends for the year. I should be eclipsing my 2021 total sometime in September. And that's what I love about dividends, is that each month a new floor and a new ceiling in terms of how high and how low your dividends can go is established. My monthly dividend total is now up to $183.40. That's a $6.42 increase from last month, and my quarterly average, how much I make every 3 months, is now up to $550.19. That's almost $20 higher than it was just last month. So this is starting to become serious money that I can start to pay some of my bills with, such as maybe an HOA fee or a phone bill or even a student loan payment. Oh, just kidding, we don't have to pay those anymore. I want to emphasize that this didn't happen overnight. It was many years of grinding and continuing to work hard and being patient with plenty of failures along the way that drive me to continue to succeed. And I'm nowhere near the pinnacles I want to one day reach because I'm still making more money going to the bathroom at work. When that day comes, when that is no longer true, I know I have reached financial freedom. Now I want to hear what companies paid you the most in dividends in the comments below. If you have any questions, feel free to send them my way. These videos do take a lot of time to put together, so make sure you've hit that like button for a small-time YouTuber. Make sure you subscribe for more portfolio updates. As always, my videos are found in podcast form under the Collect Cash podcast name, and I will stash and collect cash you later.